Hello everyone and welcome to this afternoon's webinar session. Just waiting for David to put up the recording, and I think that's all good, so we're good to go. He's giving me the thumbs up, and I think you should be able to see the disclaimer. So if we just start with that very quickly. I know you have seen this many times before, not just at our sessions but at other sessions you may attend. This is trading and investing. Can be very, very risky. You can lose your money. In some circumstances, you can lose more than you started with. So please, please don't ever use money that you cannot afford to lose. Right, okay, we'll just start. Let's move on to the second one. If you were with us last week, you will know that David and I were trying to explain what we were proposing to do with this current series of webinars, and very basically it comes down to looking at what we call the price cycle in terms of how Wyckoff looks at the price cycle. And you'll see in front of you, this is actually a slide from our Forex trading program, and you can see a very typical cycle that the price goes through in all time frames and across all markets. And we will look at some actual charts of this, of examples of the price cycle. And basically what we're going to take, this is a sort of recurring theme, if you like, but what we don't want to do is just repeat endlessly in the beginning of each webinar the price cycle, looking at the cycle in more detail and explaining the C states that we can see revealed in a typical price cycle. What's the VPA narrative? What's volume price analysis telling us in the price cycle? And we have our own quantum indicators and how they can support our analysis, and also possibly highlight changes that are going to occur in the cycle in one time frame. And today we're going to take that one step further, and we're going to have a look at multiple time frames, and we're going to be looking at from fast to slow, but also we're going to be looking at from slow down to the fast, and just to see what that tells us in terms of what is likely to happen next, because that's what we want to try and anticipate, where the price is going next and how that is going to impact how that impacts in the different time frames. But what I wanted to say was that I'm not going to go into a huge amount of detail, because David and I covered that last week. So if this is your first time with us, may I suggest you can go over to our YouTube channels. I have one under Anna Cooling, and there's also one for quantum trading, and there you will find the recordings of last week's session. You're more than welcome to watch the whole recording, but it's really that front end where, if you like, we go into a little bit more detail about detail about what we hope to achieve in this series. And it also means I don't have to go over the same ground, as it were, each time. We kind of pick it up. So if anything I say to you is a little bit, you think, well, what is she talking about? That's where you'll find it, and hopefully it'll all build up until the end of the series, and then we will start again. Now, I also mentioned very quickly the C states of the market. So this is a typical price cycle that we have here. And the C states is a way of describing different elements of the price cycle. And it was a concept that David and I have put together ourselves. It's based on our observation and our knowledge of price action, but we really explored it. We began to explore this in this book, the Binary Options Unmasked book. And even if you don't have to want to trade binary options or even interested in options, that's where we explain the concept for the very first time. But very, very quickly, what we mean by the C states is, let's go back to that There we are. We're looking at, basically, we divide the price cycle up into these different C states. We have a trend with momentum, we have a trend with volatility, a trend with momentum and volatility, a congestion without volatility, and a congestion with volatility. And the schematic, if you like, highlights the different, we can see the C states in this schematic and in the price cycle. But obviously, you know, that's the theory. The practice is we will have a look at that in more detail on the charts, because the implication of not understanding where you are in your price cycle and what C state that price action is in, if you don't understand, first of all, you don't know what's going on. That's the first thing. And secondly, it will impact the risk of any trade that you are thinking of taking on in that time frame. But as I said, the best way to understand this is to actually look at some charts. So I'm just going to stop there and I'm going to pass over to David. In this session, I've just got a couple of things I want to show you on the MT5 platform. One of them is cable and one of them is gold on MT5. And then David will move over to NinjaTrader. He's got a much broader selection of markets. Not that there isn't a broad selection of markets on MT5. It's a fantastic platform. And if you want to play around with it and your broker doesn't offer it, all you need to do is go over to the MetaQuotes site and you can download a, I don't think it times out, darling, does it? It's a non-timing out demo, and you have multiple time frames, and you have lots of different assets that you can, as I said, you can try. And you know, they're delivering a free feed, so it's a great platform to go and look at price cycle and obviously volume price analysis.
Thanks, darling. A very warm welcome to you wherever you are in the world. It's afternoon here in London. It's an absolutely glorious day again, and sunny and warm down here in Hampshire. So it's an absolutely delightful place to be at the moment. I hope it's nice where you are as well in the world. Just very quickly, you've got the charts pulled up there. You can see Anna's got cable, which you know, we've been through interest rate decision, which was pretty much on the cards, but I'll let Anna fill you in more on that. Very quickly, just in terms of platforms, one of the questions we do get asked a lot is MT4, MT5 or NinjaTrader, what are the primary differences? In a nutshell, if you go with the MT4 and particularly the MT5 route, it's all in one package. So you have brokerage, you have data feeds, and you have access to these markets. And the cost of access to the markets, all of them really, commodities, stocks, indices, you name it, they're pretty much there on MT5. It's very low. The margin requirements are nothing like a futures contract. If you go to NinjaTrader, then you're more likely to be trading pure futures contracts. The margin requirements are much steeper. You will certainly require several $1,000s for each of these big contracts, but there are micro contracts available as well. And you will need to pay for a data feed. And of course, you can have brokerage. Now, you can have all that wrapped in together pretty much. You'll still need the live data feed, which you have to pay for. But you can wrap it all in together, or you can break it up into elements. So you can have a different broker and you can run the indicators on Ninja. But as I say, it's a more fractured process, if you will. But it opens up other markets if you want to trade stocks, if you want to trade other instruments, you want to trade real options, etc., etc. Those are the primary differences. And one important thing, we never charge our customers for moving their indicators from one platform to another. We never have done and we never will. So whatever you invest in, whatever you buy in terms of quantum, you'll always have the option of moving from one platform to another as we migrate. So traders, you know, if you're a customer on MT4, you can move to MT5, you can move to NinjaTrader, whether that's one indicator or the whole lot. Just going to pass back to Anna. If you have any questions, drop them in the chat box. Happy to answer them there. Or if they're longer ones, we'll answer them on air for you.
I had cable on previously, but I just want to go to the gold chart just to look at chart structure and some C states and some multiple time frames. What do we mean? How do we see the theory, the schematic that we looked at earlier. How is that represented, if you like, on a chart? And what are these indicators doing? Why do we, what are those lines doing? What is support and resistance? How does that come in, etc., etc., and also the multiple time frames. And the reason I've chosen gold is actually because it's really at an interesting stage, if you like. If I just expand now, one of the things I absolutely love about MT5 is it offers an 8-hour chart. Now, if you have if you have a charting package, MT4 doesn't, MT5 does, and certainly you can sort out an 8-hour chart on NinjaTrader and probably most other platforms. And the reason for the 8-hour chart is where you say, well, maybe I only trade the US session on futures, as it were. This doesn't apply to stocks, obviously, because the exchange is actually closed. And the reason is this. Most instruments, certainly the futures instruments and certainly the Forex market, they trade on a 24-hour basis with the three principal financial centers. So you obviously have London and Europe, then you have London, Europe and US, and then you have Asia. And you're going to get different levels of participation, and you can actually see that reflected in the volume histogram at the bottom of the chart. But what is really interesting about having an 8-hour chart, particularly if you only trade the physical market for commodities, and that is, you will see what has been going on in Globex according to these individual session times. Now, on this 8-hour chart here for gold, we can see, what is this chart telling us? Well, let's look at the right hand side of this chart, and very, very clearly we are in a congestion phase for the metal. The top of the congestion phase, we're in the 1230 region, and at the bottom, let's see, we're down in we're not quite at 1200, but we're roughly in the $32 range. What we have to, so therefore we're in a congestion. Now, is it an accumulation phase where possibly we are going to see a reversal in trend? I mean, certainly gold bugs, every time it comes anywhere near 1200 or there and thereabouts, buyers will always step in to the gold market. But from a chart perspective and a structure perspective, we are clearly in consolidation. If we look at the candles individually, we can see some days they've been very wide ranging. We've seen volatility. We know we've got volatility. These are little purple dots here. That means the price move on that candle for that session was outside of its average true range. On some candles, it's very, very narrow, probably because it was in the Asia session. And in fact, just to tell you when these candles flick over, now this is based on MetaQuote's time, so you will have midnight, that is actually 10 p.m. London time, 8 a.m., which is 6 a.m. London time, and then they turn over at 4 p.m., which is actually 2 p.m. So this is the new candle, and this candle is going to reflect what is going to be happening once the physical market opens and you have traders from the three major centers. So you've got London, Europe, and you've got the US. So you say, well, okay, this is my 8-hour chart. Now, if I'm trading on the faster time frame, I want to know that because it tells me where my levels are, so that if I spot a potential trade on a faster time frame, I have a pretty good idea of where that trade is likely to be heading or not. But if you look at a slower time frame and we go up to the monthly chart, let's have a look here. You can see here, I mean, obviously this goes back to 2001. Let's look at this bit of the price action here. Now, this too, you could say, is within a congestion. It's a very wide congestion, and within that congestion, you've actually got a little trend lower. So you could, you look at it from the other end of the telescope. This is the monthly chart. So if you wanted to maybe short this market now, it's had a run down for the last few months. It's been quite bearish for all sorts of reasons. One being that the US dollar has been going up anyway. You could say, well, is this going to be a continuation of this downwards trend that we have in the monthly chart? Because the other thing about the price cycle is what you see on one time frame may be completely contra to what you see on another one, or the one that you're looking to take a trade on. So the monthly chart say, well, I haven't been in this trade, but is this going to continue? And what the 8-hour chart is highlighting is that it has reached a pause point. It is in a congestion. It's actually quite a volatile. It's congestion with volatility. Well, we know that because we've got the volatility indicator triggered on at least 2 candles over an 8-hour session, and that is a lot of volatility. And we've also got candles with quite deep wicks, and here we've got it looks like a doji candle. So you could argue that actually, until this price breaks either to the upside or the downside, if I were looking at it on a monthly chart, I really can't tell if this is going to carry on, or is this the start of an accumulation phase and possibly a reversal higher for gold. Now, if I'm on the faster time frames and I'm saying, yep, that's awfully interesting, and here I've got the 30-minute chart and I've got a 5-minute and a Renko chart. Now, Renko chart is where you have price action that is pure price action with no noise from the market. This is based on the ATR. First of all, it cleans up the price action, so you can see much more clearly the trends. You can see where you've got a congestion phase, where you can congestion phase with volatility, where you've got a nice uptrend or a downtrend. And knowing that it is in congestion on the 8-hour chart, and you've got your levels to the top and the bottom, will also help you where you think you may be able to get in or out. Now, I'm just going to move away from gold because I know David wants to talk about it more on the NinjaTrader platform, and I just want to do cable, and I don't want to spend too much on Forex because we've got some really nice charts, futures charts, and the indices as well. Now, today has been an important day for the British pound because the BOE have actually raised interest rates for the very first time. And this is what I wanted the Renko chart show. So we can see this is, if you think back to the schematic, this is a trend. This is a trend with a reasonable amount of momentum. But as you can see, there's no volatility. Why do we know there's no volatility? Because there's not many pullbacks. There's a little one there, the little one there. The trend monitor stayed red. Then we've moved into this congestion phase. This was just ahead of the announcement, and it is a trend. It's a congestion with a reasonable amount of volatility, and you can have a look at the time charts to confirm that. Then we had, this is the announcement. Cable shot up because interest rates went up, then pulled back, and then we've had this quite sharp fall in the pair, even though interest rates have gone up. And you say, well, how come, if a currency pair is supposed to go up, a currency is supposed to strengthen when interest rates go up, how come that fell? I'll leave David to explain that to you. And now we've come to the end of that. That was a very fast, this is a trend with a lot of momentum. It just absolutely fell like a stone, and it's reflected in the Renko. Now we're seeing a reversal. It looks almost like a V-shaped reversal. We've moved into a new session anyway. And so in the context, first of all, with cable, not only do we have to look at the context of the technical picture, we also have had the fundamental picture, which has played a huge role in, if you like, creating the price cycle and the structure of the chart, and also the C state that we can see in the chart. And this is what I meant by, I said that you have the volatility and momentum. What the Renko does, it smooths it out and really helps to keep you in. Prior to the release, this is the congestion period I was telling you about, a lot of choppy price action. Could you have taken some trades in there in a couple of those candles? quite possibly, but you have to keep getting faster and faster and faster and faster on your charts. And the reason we had this is because the market was waiting for the news. So that's that one. That's all I've got to say on that. David, do you want to leave it here? Is that okay?
Sorry, Anna turned herself off, didn't tell me. Sorry about that. Apologies. Just before we move over onto Ninja, just to talk about this chart, and this is cable, but it could be anything, because it's just a classic example of the insiders, the market makers, those people who manage the markets from the inside out. This was really the ideal opportunity, and as Anna said, you know, why did the pound not rally strongly on the news? Traditionally, you would expect that to happen. Interest rates rising, whether it's for the dollar, whether it's the pound, whatever, you would expect that for the currency to strengthen, because isn't that positive news? So why has the currency fallen on what should be perceived as positive news? And it's basically the interpretation not only of the statement itself, but also the longer term impact, and for several reasons. First of all, this was pretty well trailed, so the market was already factoring this in anyway. Secondly, it's really the tone of the comments thereafter which follow, which I suppose to Tracy are along the lines of, look, you know, that's it for now, and we're really hedging our bets for the future, because we don't see interest rates rising very quickly in the future. You know, that's in a nutshell what the bank is saying. So we've done and dusted, and we're probably not going to move for some considerable time now, because we don't see the economy as strong enough. It's an ideal opportunity, therefore, for the insiders to jump in on that news. Traditional traders will look at it and think, fantastic news, positive news for the currency, let's go long. It's a no-brainer. And it's a trap move. It's a classic trap move. Tons of volume coming in. Everyone's trapped at the top on that huge spike to the candle at the top. Down the market plunges on even more severe volume twice. Now we're seeing a minor rally, but if you look at the rally in terms of VPA perspective, you've got two nice widespread up candles. The second is less wide than the first, but look at the volume beneath it. You've got volume that's falling away. We're in a busy session. We've got all the markets running, so you know, you're seeing a pretty weak response to that. And again, going back to what Anna was saying about longer term time frames, you know, looking at the picture on a longer term time frame, it still looks remarkably bearish for the time being. So it's all wheels within wheels, but it's a classic opportunity. I mean, it's manna from heaven for the market makers and insiders, this sort of news wrapped in those sorts of terms, because it's an ideal opportunity to rack the market higher very quickly on the news, and then bang, pull it back to the opposite side and trap everyone either into a long-term congestion phase, or on this occasion where we had a total reversal. It's the news channels will report this in many different ways, but they'll find quick ways of doing it. It's like the non-farm payroll. The typical response to that is when it does this, which it does a lot, it'll go first in one direction and instantly reverse and go in the other. The typical response in the news channels is, oh, well, the market reacted to the headline number, and then when they read all the data below, then that's why the response was in the opposite direction. Yeah, well, if you believe that, you know, there we go. Do you want to hop over onto Ninja? Yeah. Just going to switch off for a minute. Should be coming up there on the Renko. That's on the YM. The place I actually wanted to start was just going back to gold, because this is really just a classic example. If I just pull that over a little bit, this is we're going right back to the start of the year, because it really replicates very closely the schematic that Anna showed right up front there. And this is going back over here, right on the left-hand side, over to 2017. This is the start of the new year here, 2018. We were still in uptrend on gold. Looked as though it was going to carry on. Then we went into this extended congestion phase throughout February, March, April. Mid-April, we start to break down. It's the classic sort of distribution. You've got volatility in there. You've got high volume. You've got whipsaw price action, etc., and then we start the breaking down effect, and it's all associated with high volume. Once you start to see these widespread candles with very narrow wicks to top and bottom, or very small wicks rather top and bottom, what you're looking at is the volume associated with it. It's pretty high. It's not quite the highest so far on the chart. We actually had it over here at the start of the distribution phase, but it's certainly confirming this weakness. We go into traditional congestion phase thereafter, which you see repeatedly. Price action doesn't fall out of bed one candle after another. Typically, you'll get the congestion phases building, then the next leg down, and another congestion phase, the next leg down, and so on and so forth. Simultaneously, we've got these. I've just got the accumulation distribution indicator, and I've actually got it. Can't remember if I've got any factor. Let's have a quick look. On a lot of the indicators, we give you the option to. Now I've got the cluster factor of 0. In other words, I'm showing all the levels here. When it's 0, for those of you who have this indicator, it's showing a 0 at the moment. So I've basically got all the levels displayed. And the accumulation distribution is very similar to the support and resistance indicator on MT45 because it's purely based on price action. So it's building these levels of resistance, these levels of support, and the wider the dotted line, the dashed line, then the more significant those levels. This was mid-June, another breakdown, lots of volume underneath that, just confirming the bearish nature. On we go again, down we come into another phase here. Now we're July and we're starting off into August, and we're continually breaking through these what were relatively strong levels of potential support have now become resistance to the upside, and the most recent of those is just here below 1230, 1226, 27, something like that. And gold is looking very, very bearish for the time being. Sorry, gold bugs, but that's just the way it is. And as you can see, we've got the trend monitor down here. And if you're trading this, and this could be a 1-minute chart, it happens to be a daily chart, but the trend monitor works exactly the same way on all the time frames. The trend monitor has been designed to help to keep you in, because when you get to these phases where, for example, you've seen the downtrend, you've maybe got some profits in the bank, and then the market starts to rally against, the first thing you look at is obviously the volume profiles, and you look at the volume here. In this candle, for example, this second candle of the uptrend, the first one, fine, volume price in agreement, that looks okay. We've got a widespread and we've got some decent volume under it. But then you get the second one. And why have we got volume which is 1 1/4, 1 1/2, not quite 1 1/2, but certainly 1 1/3 times bigger, but actually the price spread is only half this candle, the previous candle? What is that telling you? What it's telling you is that the effort that is going into this particular candle with this particular volume is not driving this market. In other words, this is selling into weakness. So this rally is not going to last very long. Yes, it's a rally, carries on up for a little bit. We get another candle here, more weakness signal with the wick to the upside. Then we start to break down again. And those are the sorts of signals you're looking for all the time. From a VPA perspective, the trend monitor here hasn't even flickered. It hasn't even changed. Certainly within this extended phase through here, where we were trading in here for what was almost a month, I guess, it certainly did start to transition on 1 or 2 occasions. It went to dark red. It never went to dark blue. And the way the trend monitor works is it transitions, it cycles through those colors, and you can adjust it. And the same is true on MT4 and 5. If I go down to the indicator itself, where is it? Where's the trend monitor? There we go. There we go, got it first up. And you can adjust the sensitivity up here, and I've got it set at 50. So it just makes it slightly less sensitive to the changes in trend. In other words, it holds the congestion phases for a little bit longer, but you can adjust that. If you prefer to see changes in trend come through a little bit more quickly, you can do that. If you want to slow it down a little bit, you can do that as well. As I said this morning, it's like the volume control on a radar, on a radio rather. And you've got the trend line down here as well. So that's where gold is. I just wanted to show it to you because it really does represent that schematic very well, and it's a visual of the expectation of where this market is going. Now, at the moment, what we're seeing from certainly from a gold bugs perspective is not terribly encouraging, because what we want to see over here, and we look at it in different time frames, is really If this market is ready to reverse, in other words, an accumulation phase develop, then we want to see a lot of volume coming in. You'll start to see volatility, maybe hammers, that sort of type of thing, but significantly an increase in volume. That will then develop into the congestion phase, and ultimately thereafter we may see tests or whatever it may be, and then the reversal will start. So you're seeing a complete cycle. The other aspect of this too is also gives you a sense of how long the cycle lasts. There's no ruler that you can put on it and say, well, on a daily chart it's going to last, X number of weeks or X number of months. But it does give you a sense that this phase of price action really has been going on for, where are we back in, this was December, mid-December 2017. So this whole price cycle has taken, 6, 7, 8 months. That is the sort of time frame that you expect to see these things happening. And if this was a minute chart, then this would be maybe, I don't know, an hour and a half, maybe 2 hours, something like that. You see this all the time, and so on and so forth. And that's the way you have to look at it. It will all be related to the time frame under consideration. I'm just going to switch off for a moment. I don't know if there's anything that Anna wants to add to that. Okay.
Sorry, all I'd say is if it's an accumulation, it would invalidate the monthly chart.
Yes, that's true. Right. Let's just go and see what's happening on. We're moving now to the other end of the scale. I'm just going to go to the dollar. This is the dollar index at the bottom, and it's actually mirroring what's going on. I've got the Aussie dollar here on 5, but you can ignore that for the time being. It just shows you the relation, obviously very close relationship between a currency pair and the dollar. But this is the dollar index on 5. Had this big spike up just as we were coming into the US Open, and for the time being, it's sort of dawdling lower on the 5-minute time horizon. Yes. Sorry. Right, let's just move that out of the way again. If we just go over, I've also got, let's see, what have we got here? That was the daily chart for that. Let's go to the Renko. This is for, I've got the YM here. This is a new indicator we're just about to release. If you have the full Ninja indicator package from Quantum, then you will actually get this as a free add-on to your full package. And the setting for this at the moment, the indices are all trading in a pretty much a sideways range. Let me just go and have a look at the tick speed over here, because this is for the ES, the equivalent on the 1 minute. This is trying to rally a little bit, but it's not really getting very far. So let me go back to the Renko, and we're in sideways price action. And what the way we've developed the Renko is a standard chart offering on NinjaTrader, which is fine. You can see it there. It's perfectly freely available. And what we've developed and added onto the Quantum indicator package is the ability for the system, for the indicator itself, to actually deliver the optimal setting. Now, I've actually got this at the moment running on 1 minute. And what it does at the bottom, it then tells you we've now moved to a 10 brick size. Down here at the bottom, it says click here to open a 10 brick Renko chart, because at the moment we're moving in a sideways price action. The market is very sluggish. So it tells you instantly how quickly the market is going. This morning we had some nice price action, and that's why it was running at 5, and that's 5 index points, because we're running a futures contract here. This is the YM, this is the mini contract for the Dow Jones, and it's $5 a point. And as you can see here, this was this morning's price action. Through the morning, we're now trading in this heavy congestion phase. And the reason that it slowed down to a brick size of 10 is because of that fact, because the way the indicator works is it's based on average true range. So dependent on the time frame you select, and you can select any time frame, it will then automatically deliver the optimal setting for that particular time frame. And obviously that will depend on whether the market is very fast moving or very slow moving. And a Renko chart, if you've never used one, is completely independent of time. And it's exactly the same as the tick chart I've got over here on the other tab. Move over to that in a minute. But a Renko chart and a tick chart will give you a visual on momentum because they are completely independent of time. So we're running on 10 index points here, which is quite wide. Those 10 index points may go through the market in a minute. It could be 20 seconds, it could be 5 seconds, it could be 5 minutes. It just depends how fast the market is moving. And that's what you see on a Renko chart. And that's also what you see on a tick chart. So what we've done with the Renko here is take the Renko chart itself and we've optimized it. It's called the Renko Optimizer. So you can choose any time frame you like. If we stick to the 1 minute, we'll just see if that's changed yet. Whether it's still telling us. We've actually slowed down a little bit. Now we're going to go to an 11 brick size. And I've also put on here, I've kept this very, very simple. I've got the trend dots in here, which work really, really well with the Renko. You can see here these transitions into gray as we move into the congestion phase. We go back into red, into gray again, back into red on the trend dots. Got a few blue ones here where they arrive here, but then we're back into gray again. Now we're starting to see the development of the trend dots into blue and a possible reversal up to the upside. And you've got to remember also that each of these bricks is actually worth 10 index points. And on this particular contract, that's $50. So we're not talking peanuts here. This is a decent contract to trade. What we're also seeing here on the trend monitor, we've got the trend line, which attaches to the trend monitor itself. That's starting to climb away from the midpoint here. And as I mentioned earlier, we've seen this transition from bright red, very bearish, into congestion, darker red. We went back into it here. Looks as though the trend was going to continue. Then we went back into darker red again. Then we went into dark blue as a possible reversal into a full-blown trend reversal into bullish trend. And now we've gone back into, or we've had a complete transition through to our bright blue. So we've basically gone from dark red over here, which was throughout this morning. This was trading Globex because these markets trade 24/7. We've gone through that phase and now we're starting to come out the other side and we've got this bullish trend developing. And I've got the accumulation distribution indicator on here. And I've got this reduced down on the cluster factor, which means I have fewer levels. I've only got the significant levels in play here. So I've got just move that out of the way. This is an area that's been tested 10 times. This is an area that's been tested 5 times. The same here. So these are strong levels, and this is a strong level below of 4. And obviously, once the market starts to get to this sort of level, then we could see some resistance coming into play on any further development of this move higher. So that's the Renko indicator. It's going to be released in the next couple of days, I think. It'll certainly be available early part of next week. As I say, if you have the full package of quantum indicators on NinjaTrader, you will get this free for life, as with all the other indicators. Let's just go over to the tick speed. This is for the ES, which is a much bigger contract in terms of monetary value at any rate, and also how heavily it's traded. This is the tick speedometer, which basically, if you've ever traded, this is the tick chart. The problem with trading tick charts is you never really know what to set this to. Now this is set to a very fast tick speed up here. This is 89. In other words, 89 ticks, 89 contracts going through the market. And as with the Renko chart, this is purely time independent. That number of 89 could be achieved in a second, half a second, 5 seconds, 10 seconds, whatever it may be. For the ES is the most heavily contract traded of all, and the ES is the E-mini futures contract for the S&P 500. Now, as I said earlier on, if you want to trade the indices, you can do so on MT5. They are there, and they will cost you nothing like the amount of margin you would be required to trade a full futures contract over on the NinjaTrader platform. So what I'm going to do is I'm actually going to change that, and that's what the tick speed was designed to do. It was designed to deliver the optimal setting for the tick chart. You can see down here where my cursor is, we've got a choice of 610 or 540. The reason there are two numbers here is purely because the fib number is nothing to do with Fibonacci per se, other than it's the closest number to this one, which is the actual, which means that you don't have to change your charts all the time. It would be impossible to change your chart to the actual continuously. From a personal perspective, I use the actual when Globex is running because it's less frantic. When the physical market is running in parallel, which is what we have now, then I switch to this one, which is the closest. As you can see, it doesn't change so often, and it's just a more relaxed way of using it, if you will. So that's why we deliver these two numbers. Other than that, there's nothing different about them. It's purely designed to give you the closest figure without you having to change the charts all the time. And then what these colors are doing, you can see here we have this huge surge in volume. This was the cash market open, the physical market opening, if you will. This is trading in Globex up to here, and then we get this big surge. And wherever you get these surges in activity, you'll get the green come through on the indicator or the orange. So what the green and the orange are saying, the green very loud and clear is telling you this is a surge in activity. We've got high activity coming in on the volume in terms of the tick volume. And the orange is really when the market is moving along in an expected average tick rate, if you will. And then where you get these red phases of price, red coloration on the indicator, that is telling you that the market is a bit sluggish, activity has died away for the time being. And what you're looking for all the time is you're looking to identify these active areas. That's where you want to be trading because you've got plenty of activity. What this also allows, the tick speedometer, not only does it deliver the optimal settings over here, what it also gives you the opportunity is to apply traditional volume price analysis because you've got volume down here and you've got price above. So you can apply a blend, if you will, of volume price analysis applied to the tick chart. Now I'm just going to hop over here and change that to 610 tick. And that figure of 89 was the one that the market was running at before the physical market opened underneath. So it gives you an idea of these huge changes, the huge surge in tick activity you get as the market opens up with the physical. So you've got the physical running alongside the electronic. And of course, all the indicators working exactly the same way on tick charts. So you've got the trend monitor at the bottom. I've got this very simple, you've got the accumulation distribution, and you've just got the pivots on here as well. So it's a very simple chart for trading. And of course, you'd be doing this, you use the indicator exactly the same way as we do with everything else. You would use multiple time frames, and the same would apply to tick charts. So you would have maybe a 1 minute if you were scalping, indices, if that's your preferred market to trade, then what you would do here is you would have maybe a 1 minute, a 2 minute, a 3 minute, and you'd have the equivalent tick charts running alongside with all the information that they are giving you in terms of levels, in terms of volume, in terms of activity, and obviously supported by the indicators. And of course, even in a tick chart, you will get that cycle of distribution, accumulation, distribution, accumulation, but it just happens so much quicker. On a tick chart, it could happen in 10, 15, 20 minutes, for example, half an hour. And that is why it's all relative. But the process of the rotation from one phase to another is exactly the same. It's just the time frame that it applies to that is different on each occasion. You can see here we're pushing up to, I'll just go back and see what the tick speed is. I've got this on, okay, it's oscillating. We can go up to, let's put it up to 987. Let's put that up there, just change it up a little bit. Just coming up to this level at 2804, and again, if we, it's a minor level of resistance right now, but it may build into something a little bit stronger. If we push through there, then we could see it pushing high. You can see the trend monitor down here, helping to keep you in. We had a little transition there to darker blue. Now we've gone back to bright blue again. The trend line fell, moved back down to the center line. It's just sort of running parallel with it at the moment. Just see what happens on the next one. Let's just go back and see what our tick speed setting is. Okay, it's slowed down a little bit. You can see here we're flip-flopping. There's quite a lot of red in this region, so the market is not roaring along. This is a bit sluggish at the moment, and certainly for the ES, this is quite a low tick count. You often see this going up into the certainly into the thousands, and sometimes even into the tens of thousands. Just starting to tick through there. You've got to remember that index traders, if you're trading this index, you're looking for something like this. You're looking for 2 points. That's a solid move. You might be looking for a quarter of a point, a half a point. So you really are down at the coal face of scalping a market like this, which is where you need these tools and indicators, which is why most traders who trade on the indices as a scalping approach will use tick charts for their preferred style of trading. Let's just head back to the Renko and see what's happening on the Renko. This is a much slower pace of life. We're running at 11 brick size here on the YM, but the YM, generally speaking, doesn't move at the same sort of speed. You can see the amount of, it's literally building in real time. You can see this level of potential resistance building constantly in this region with the accumulation distribution. Trend monitor is still blue. We've still got the trend line climbing, but it's a little bit sluggish, as was on the ES as well.
You can set it to a fixed size.
Yeah, you can set this to a fixed size if you wish as well. Of course, the fixed size is always an option. It's the same on with the indicator on MT4 and 5. You either have the choice of setting a brick size, or you have the option of setting it to an optimal setting for the particular market and instrument you're trading. Let's just go back and see what the dollar's doing. It's that's not exactly moving around at great speed either. It flattened off. We've got this is back to gold. This is going to gold on a 5-minute time horizon, and it really just highlights the fact that even though the longer term trend for gold is very bearish, there are opportunities to trade gold to the upside. There are always those opportunities. Got this nice run up, and obviously some of that will certainly have been triggered by what is going on in terms of the dollar. Not always. Doesn't always hold true, that relationship, but generally speaking, if the dollar's rising or falling, then you will see the inverse occurring if you're trading commodities. I say it's not those relationships, whilst they are strong, they do break from time to time. You will see gold rising with the dollar. You will see gold falling with the dollar, and indeed the other commodities as well. But this is, it's a nice short-term scalping example. If you're scalping, you're looking at volume price analysis again. You've got the trend monitor here. We transition through. This is the volume point of control. The reason I have this chart on here is really just to break out some of the indicators, because when you see them all on one chart, it can be a little bit overwhelming. So I've just got the volume point of control on here. And what the volume point of control does is really takes the volume message from this linear relationship where we're looking at volume and price, and it swings it up onto the x-axis here. So this volume profile here is really showing you the levels of volume that have been built in those areas of price. So where you have a lot of concentration of volume, that is where the volume point of control itself sits, which is this dashed yellow line. And where you have relatively thin concentrations of volume, then price has tended not to pause there. And the reason that's important from a trading perspective is that you're looking at volume here in much the same way as you would do support and resistance from a price perspective. You're looking at the volume concentrations from a support resistance perspective, because if price gets down to these areas of low volume, in other words, you've got very little concentration of volume in this price region, then if the price gets to this level, you would expect it to move through pretty quickly. When it gets to these regions, for example, where you've got heavy volume, then price is more than likely, certainly if it's the volume point of control, it's going to congest at the very least. So your expectation is always, your anticipation is that the market is not going to move through there very rapidly. It's going to congest, whereas if you're getting to a low volume node, you expect the market to move through pretty quickly. You can also see down here we've had a nice change in transition on the trend monitor. We've gone very evenly from bright blue to dark red into bright red. It doesn't always do that. Sometimes it goes even from bright blue to bright red if it's a very fast change, and it may miss out one of these steps in between. But that is a full color spectrum, if you will, from one end to the other. And you can see down here as we're moving lower, we've got price action, we've got volume rising as well. So it's really just confirming the weakness in the strength in the move lower. You also got to remember, this is only, what are we talking about? We're talking about $5 an ounce. It's a lot of money in terms of the futures contract, but in terms of the price move, it's not a significant travel, but nevertheless there is money to be made in there if you're a scalping trader. If you're a longer term trend trader, or if you're holding gold for an investment, or you're selling gold on the daily chart, this is going to have little impact. You're looking for a break below 1220, 1218, 1215. That will signal possibly the next leg down in the longer term bearish trend for the metal. Just going to switch off for a moment and grab a drink.
Do you want me to do it?
Yep, yep. We're just going to switch screens back to Anna on the MT5. Let me just answer the question from Sudhir. Yeah, on the CFD volume, volumes will vary slightly obviously from instrument to instrument and from broker to broker, market to market. But in essence, if you have that on an XM demo account and you're looking at volume on the profile, sure, any volume is good volume. And it doesn't matter whether you're trading ETFs or CFDs, or whether you're in the cash market, whether you're in the futures market, whether you're in the proxy spot FX market, you can apply volume price analysis to that instrument. Yes, there will be variations. We get endless emails and it always comes up in conversation. Well, I've looked at this volume profile from this broker and it differs from that broker and blah, blah, blah. It is a fact of life. You just have to accept that. The key point is that if you compare volume with volume and you're using the same instrument from the same broker, perfectly fine. Nothing in the world is perfect, I can assure you. And the same applies to trading and the same applies to volume. And it's always the criticism that's often leveled at it that you can't rely on it, and it's in stocks you've got dark pools and blah 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 and all those sorts of things. It always comes out in the argument. But trust me, whatever you're using to look at the volume is perfectly fine, whether it's on a proxy or whether it's a true cash market, whatever it may be, or a futures contract.
Okay, we've just come back to my screen. This is actually the my workspace for Eurodollar, because I just wanted to highlight again to go back to the structure. If I just reduce that down, here we are. Again, we're looking at a congestion phase for Eurodollar. It very much reflects what you will see in the dollar index. I've actually got a version of the futures contract of the dollar index on this demo account. This is XM, and it works really, really well. I'll just reduce that so you can see it a little bit better. No, it's not going to play ball. Never mind. Let's bring that over there. And you'll find Eurodollar and dollar index will pretty much mirror each other, as I said this morning, because the euro is has one of the largest has the largest weighting in this particular index. And sometimes people say to us, "Well, I've come along and I really want to know about futures, and I want to know about stocks, and I want to know, why do you keep referring back to the Forex market?" And the reason is this. quite simply, if you are trading commodities and you have absolutely no idea what the dollar is doing, then you've only got a very small percentage of the information that you need, because the dollar strength or relative dollar strength and weakness has a direct impact on what is happening in the commodity markets. Not all the time. It's not, the correlation won't be absolutely perfect every time, but generally speaking, if the dollar is weakening, then you will tend to find that commodity prices will be rising. And with regard to equities, the dollar and the yen are the two most important currencies in the markets, and the yen is it's a risk currency. It's a proxy for risk. So if the yen is being sold and sold pretty heavily, then the indices and equities are likely to be rising. So having an eye on what is happening in the forex market, and of course in the bond market, is going to give you that all-important three-dimensional picture of sentiment, and also will also tell you where is the money flowing to and out of. So that is the dollar index that I have here. But if I just go back to the 8-hour chart here, we can see the euro dollar has been again in this consolidation phase. We can see where it's bounded by our support and resistance indicators. We've got 1783 to the top, and we have 1507 to the bottom. Now, within the consolidation, it's really a consolidation. I wouldn't have said that that was particularly with volatility, because within the consolidation you have some nice runs. You have a bit of a trend run, and the one we were looking at this morning was this little bit here, and we were particularly looking at this candle. This was the candle that was being formed as we did the webinar this morning, and what we were looking at we were looking at 1619 as a level on the 8-hour chart. Was the euro potentially going to reverse from there, or was it going to carry on lower? In fact, it looked as though it was basing on there, and it did sort of tick up a little bit, but in fact, as you can see from the candle, I'll just expand it here. Where's it gone? I've lost it. There it is there. It actually, this is the session we're in at the moment. The candle went over at 2 o'clock our time, but you can see the spread of that candle, and in there would have been opportunities to trade to the downside, and now it's moving back up, and we've got like a hammer candle there, and the price is actually, it's now retreated to within the spread of that candle. How that is reflected, as I said, in the Renko chart, that's been the move lower. Then we had a little bit of congestion. We always have a little bit of congestion, and this is the move. This is this little move. This is actually the tail, the wick of that candle, and it's at 1604. With Renko and time charts, you'll never get never going to be absolutely spot on in terms of values. And it looks like possibly the sentiment in euro dollar that was, is going to carry on. This is from London, Europe and London this morning, because mid-morning we had a lot of euro buying or dollar selling. And this is what you've got to start to recognize. You've got to start to recognize where you are in the price cycle in whatever time frame that you're looking at. Just reduce that down there. So it's very clear. We are in a congestion phase. We're in quite a wide congestion phase. It hasn't got volatility. So there are going to be opportunities to trade on the faster time frames. I'm not saying comfortably, because it depends which session that you want to take some trades on, but this is what you are looking at, and it is going to have an impact on perhaps where you're going to put your entry, and more importantly where you're going to put your stop loss. Now, if we go up to, say, the monthly chart, we're going to get a completely separate picture. We can see actually we had a congestion phase here, went along quite nicely. What was the bottom? This is almost everyone was worried that dollar and euro would actually go to parity. It never did. It actually managed to lift itself up, and here we have a trend high. Don't forget, this is a monthly chart. This is over a long period of time. It doesn't matter whether it's a monthly. You could be looking at a 5-minute chart, and I would have said that was a fairly nice trend. David, would you say that? A trend, you know, nice clean trend. You can see the candles, clean tops to the tops and the bottom. Not a lot of volatility. A little bit of a pullback. Then we had the resumption of that trend. Now we haven't had a lot of distribution up here at the end of this trend. It looks like it's just being a pullback, and now we're looking at perhaps are we seeing some consolidation? We've got doji candles. Where you have doji candles, if I just extend that out, where we have doji candles in our price action, we have a lot of indecision. Maybe the market can't decide, is this actually just a little pullback and it's going to carry on higher, or in fact it is the start of a reversal. But what is happening here, this is the monthly, it's going to determine what's going to happen, you know, what is happening on the faster time frame. So that's something to take away and consider. Next week, we'll perhaps look a little bit more at support and resistance and how we can use those lines that we have on our charts. I'll go through the Camarilla indicator in a little bit more detail to actually, you know, once you've got this information, well, what am I going to do with it? You know, am I looking to take a reversal? Am I looking to take, you know, look for a continuation? Because one of the questions we had this morning, and it's a very fair question because we all come to our computers at different times, and this morning this price action was hitting the 1619, and you were going to hear, well, you know, am I looking at a continuation here, or am I looking at a potential reversal? Because, you know, you don't want to be seen to be chasing price and jumping in and then, you know, and then getting stopped out, as it were. So what I said this morning was, well, we have to wait and see on the slower time frame. If this is going to break the 1619 and the volume is going to come in as well, then the chances are it was going to carry on lower. And in fact, that is exactly what happened that we saw on the Renko. And in fact, you know, a very nice trade came out of it as a result. But we had to be patient. And this is where support and resistance on the slower time frames will help you make that decision. And David mentioned the volume point of control. That's another indicator that will help you in that decision. But we don't want to talk about all the indicators all in one go because it can be a little bit overwhelming. But if you have any questions about them or anything that we've said, you're more than welcome to drop me an email, anna@annacooling.com, or at Quantum Trading, and it's help desk at Quantum Trading. And you can find more details of the indicators at quantumtrading.com. We sell them individually. Some of them are bundled, or we have a complete package. If you don't see a bundle that you are interested in, we will, you know, we can bundle, we can do a special price for you. You only pay us once, whether it's an individual, a bundle, or a complete package. You own them for life. You don't pay for any upgrades. And if you do decide you want to buy one and then you want to maybe buy a bundle or a complete package, you obviously credited with what you have already paid for. And as I said, it's all future upgrades, enhancements to the indicators and to the platform, and you can transfer your license from platform to platform for free. The only difference is between the MetaQuotes platforms and the Ninja is the Ninja complete package is slightly more expensive because it has some indicators that just aren't available on MT4. And the whole thing is backed by our support. We do support our users 24/7, and I really do mean 365 days of the year. We have and that's worldwide. Just because we're in the UK, that doesn't, you know, we have people based out in the Far East as well. So we do genuinely cover every part of the globe, quite frankly. So if you've ever got an issue, and on a Sunday, and high days and holidays and Christmases. And what we've also done is as a business model, if you do invest in the full package, whenever we develop a fresh indicator, you will get added to your package. You don't actually have to pay for any more. We have users who maybe when we started we had 8 or 9, I can't remember, and since then we've developed another 8 or 9. Now, you know, you may wish to use them or not, but they're there for you to use as you wish. And in later webinars, what we're going to do, we're going to look at the indicators in terms of why they've been developed for a trend. We're looking at chart structure, congestion with volatility, trends, different types of trends. But these indicators, you know, they're there to help us deconstruct the chart. What is the chart telling us? You know, how are the indicators highlighting the structure of the chart, and also the C state of the chart and the different elements of the price cycle. And of course, as always, you know, if you ever buy a bundle or one or two, you want to upgrade to a full package, we will always credit you. And if we do have users who have more than one license. If you buy a second license from us, you do get a discount as well. And finally, I've mentioned the Forex Program. Yes, it is predominantly, you know, it is for Forex traders, but there are modules in there which are common to all markets. But if you want more details, and it's from quantumtradingeducation.com. As you can see, there's over 50 hours of video podcasts, and there are PDF. It is very much a self-directed program. We have a forum, we have called Trader Chatter, which you more than welcome. Our users come along and our traders talk to one another, they can ask questions, but it is a self-directed program, and by the end of it you will have a detailed and intimate knowledge of price action, VPA, fundamentals, related markets, the mechanics of trading, and of course probably one of the most important modules, and that is the psychology of trading. So David, is there anything else you want to say?
No, I think that was it. Just to answer a question.
Yep, I'll turn myself off.
Sorry, just to answer, going back to Sadia's question about volume. If you do want volume on your charts, then you probably, certainly for the UK at any rate, you will need to go to someone who provides that information. Off the top of my head, we've dealt with, we used to use a company called 10-4. I think they've been absorbed now, but certainly they deliver. Another one is ChartSmart, I think, which is predominantly US and Canadian, but I think they also do UK stocks as well. And there's also a company in the UK whose name's always slips my memory. No. Oh gosh, I can't remember them. They've got a funny name, their company name, something like Ionic, or it is Ionic. Is it Ionic? It's not. It's not. That's not the name they trade under. But they are very well known. Forgive me. If you send Anna an email, Sadir, just send an email to anna@annacooling.com. And I'll dig that information out for you, and happy to email that back. I can't remember their name, but it's a very good company. They've been around many, many years. It's a very solid product, and they certainly cover the UK data. But you will certainly need to access something like that if you want to get true volume on, or the cash market volume on your charts, and then use whatever other platform for trading and indicators, what have you. I'm going to pass back to Anna.
Thank you so much. It has been recorded. It will go up on YouTube. What we're thinking of doing also is, when perhaps looking at what happened this morning, we'll be looking at one particular trading setup, as it were, and obviously we have to stop the webinar. Is David and I are going to be looking at perhaps doing a very short video, just to sort of a bit of a catch up to see, as I said this morning with euro dollar, was it going to was it going to reverse off that off this strong support at 16.19? Because with this indicator, if it's a solid line, it means it's a much stronger resistance support, or resistance if it's a hatched line, and perhaps not quite so much. In fact, if we look at that little candle there, we could see there was probably a little pullback there, but honestly, by the once it actually broke through this support line, it did carry on for quite considerable way. 16.19, we know where it was aiming for. It actually went to 15.99. It was about 20 pips down there, wasn't it, David? And you know, for a trade in a reasonably busy session, 20 pips is really not bad. You know, you start doing those on a regular basis and you'll do pretty well. Right, thank you so much for coming along. We will catch you next week. As I said, if you've got any questions, just drop me a line, anna@annacooling.com or helpdesk@quantumtrading.com. So enjoy the rest of the day. It's NFP tomorrow, deep joy. And, you know, there's always something going on in the markets, and we will catch you next week. Take care, everyone. Bye.